So continue number 2. This will be in 1929. The United States experienced a severe economic downturn known as the Great Depression. There was a stock market crash of October 1929, referred to as Black Tuesday, which marked the beginning of the crisis. The crash had significant impact on the banking sector, leading to a series of bank failures and a collapse of public confidence in the banking system. I'm going to guess before I even go through my notes that was because people were borrowing money and couldn't pay it back. Or they had risky investments the banks made themselves that ended up not paying it out well. As stock prices plummeted, many investors lost substantial amounts of money, causing panic and a rush to withdraw funds from banks. This led to a wave of bank runs, where depositors attempted to withdraw their money from the banks all at once, fearing that the bank would fail and they would lose their savings. So like a mass hysteria and that herd mentality, making a bad situation worse. And the banking system at the time wasn't as regulated or protected as it is today. And many banks were operated with insufficient reserves to meet the demands of depositors, which is the case for probably all of them nowadays. Most of it's just credit, and not really M2 money supply even. As a result, numerous banks were unable to fulfill withdrawal requests, leading to their closure and subsequent bankruptcies. The failure of banks had a devastating impact on the economy. It resulted in a contraction of credit, making it difficult for businesses and individuals to access funds for investment and consumption. This in turn led to a decline in economic activity, widespread unemployment, and a prolonged period of economic depression. Right there. Contraction of credit and unemployment, very similar to what's going on now. To address that crisis, the government implemented various measures, including the Emergency Banking Act of 1933, which aimed to stabilize the banking system and restore public confidence. The act provided for the reopening of solvent banks and the establishment of the Federal Deposit Insurance Corporation, or FDIC, to ensure bank deposits, ensuring that depositors' funds would be protected in the future. But overall, the banking sector in 1929 faced significant challenges and experienced widespread failures, contributing to the severity and duration of the Great Depression. And we already had 4 banks fail this year. The crisis highlighted the need for stronger regulation and safeguards to prevent such events from occurring in the future, which I guess is the natural cycle of things. Some things get screwed up and you figure out how to make sure it doesn't happen again. Except in this case, I guess the cycle has been so far back, and there may not be anyone around to really remember exactly how it went, that still, even something that already happened, and is similar that happened, most people aren't even aware or ready for.